Well, new figures show that home prices fell by an average of 5.4% over the year that ended on June the 30th. This is for the Greater Toronto Area. And the Toronto Regional Real Estate Board says Canada needs a trade deal with the U.S. and 2 more interest rate cuts from the Bank of Canada. Let's talk about it all with Cailey Heaps, Chief Executive Officer of Heaps Estrin at Royal LePage. Cailey, thanks a lot for joining us. Are you surprised at all in these numbers? I think a lot of people who watch the market in a casual way, in a water cooler kind of way, find the news fairly jarring that home prices came down by 5.4% in the Greater Toronto Area from June of last year to the end of June this year. And I should clarify that the Real Estate Board releases all kinds of data. That is a distillation of home prices into what the board calls its benchmark home. And it says its benchmark home. We can show viewers a graphic here. Its benchmark home price was down by 5.4% over the year that ended on the final day of June to just over $1.1 million. Were you surprised, Cailey?
Thank you. It's a very good question. I wasn't particularly surprised. I think that the first and second quarter of this year have been marked by so much geopolitical uncertainty that a lot of people took a wait and see approach. So there was still inventory coming to market, but there was a lower absorption rate. So of course, that's going to push pricing down. So in short, no, I was not surprised, but we are starting to see some positive signs in the market.
The Real Estate Board, TREB, the Toronto Regional Real Estate Board, says as follows: a firm trade deal with the United States would go a long way to alleviating a weakening economy and improving consumer confidence. On top of this, 2 additional rate cuts from the Bank of Canada would make monthly mortgage payments more comfortable for GTA households. Do you agree on both fronts? Let's start with Canada-U.S. trade, first of all. How much of a headwind is that to a household that wants to purchase a home?
That's a great question. You know, I really think it speaks to consumer confidence. We've been in an environment where there's been so much uncertainty, be it the political situation with the U.S., our own election, and then, of course, you know, the developments overseas. So I feel like it's been one issue after another that's caused people to just want to pause and watch the market. So if we could have a trade agreement in place with the U.S. that provided some certainty, I think that would certainly help with consumer confidence. And speaking to mortgage rates, of course, if we had 2 rate drops, that would fuel the market as well. Although we are more affordable than we have been for many years.
Oh, that's an interesting point. Follow up on that last point.
Yeah, well, I mean, we're in a declining interest rate environment from the peak of the interest rates. Housing prices have gone down, which means that they're more affordable, of course. So I think, you know, the overall environment, it's actually a great time of entry for buyers.
When you speak to clients, do they talk to you about things like U.S.-Canada trade and the macroeconomic picture?
They don't speak about it specifically. You're able to understand that there's something happening on the broader scale that's holding people back from making large purchasing decisions. And whether that relates to economic uncertainty as a result of, you know, trade agreements, whether it relates to job insecurity, if their job is tied to, as an example, construction right now, you know, there's some concern about the lack of new condominium projects and how many jobs are tied to that industry. So I think there's just this larger macro environment that's causing people just to pause, and we need consumer confidence to rise.
What are you seeing in terms of foreign buyers in Toronto? You've spoken to us in the past about people leaving the United States and coming to Canada, some Canadians leaving to go to the United States. So what are you seeing on that front?
I'm glad you asked that. So we're still seeing quite a lot of, I would say, intellectual capital flowing between the U.S. and Canada. But the other segment of the market that's really pronounced is the Iranian market. So, you know, it used to be that foreign buyers were Russian many, many years ago. And then the Chinese community was the most prominent as far as foreign buyers are concerned. And now it seems to be the Iranian community. And given the recent conflict, we are seeing an increase in Iranian buyers who are ready to move to Canada, who have PR and have their funds headed towards our country.
That's interesting. What about the condominium market, which has been very weak for some time now? A lot of very small condos built for investors, perhaps now perhaps sitting empty because buyers don't want units that tiny.
It's a really timely question. So had you asked me that a week ago, I would have said the investor market was all but completely quiet, if not dead. However, since the weekend, we have a few listings that are in that sort of micro condo investor market. And since the weekend, we've had a huge upswing in showings. So there's something happening in that entry level condo market that I think we'll see flow through to next month's numbers.